So, in our normal episodes, we always talk about stocks, shares, companies, the economy. Today, we want to highlight something completely different, and we want to talk with you about commodities. But first, what happened on the 20th of January? We all know it, we see him in our screen. Donald Trump became the president of the United States. And yeah, he was saying that was going to be a big turnaround for the United States. Well, the first 8 weeks of his mandate were not as good as he might have expected for the S&P 500. The stock market went down with almost 7%. Come up a little bit, but definitely not positive. On the other hand, he was very positive for the European stock market.
Yes,
so
thank
European
you.
stocks
Yeah.
are indeed going up a lot. And that Casper is going to explain to you.
Yeah, thank you, Trump. Because if you are investing in Europe, you had a first good almost 3 months of the year. Because and the Dutch stock market only went up with 5%, and the best performer was Frankfurt with plus 50%, and the other ones from Spain and UK are in between it. So a good start of the year because of Trump, I would say. No?
Definitely.
Going back to Trump, the trade wars that are going on are mainly driven, or at least for a big chunk, driven by the commodities. Trump, for example, the steel import tariffs that he put in place, that is of course based because he wants to use his own economy for the steel production. But the war that's going on is mainly, of course, involving in commodities, and that's why we're going to talk about. We're going to talk about commodities, what they are, what the important ones are, what the best outlook is for what commodity for this year, and how you can invest in specific different commodities and baskets of commodities.
But what are commodities? Commodities are raw materials that are used to manufacture consumer goods. So everything that you have in your house, most of the things, like your telephone, your washing machine, everything contains commodities. That's from iron to oil to plastic, which is again made out of oil, the golden ring that you bought for your wife, everything contains commodities. So, and the fun thing about commodities is also that they're interchangeable. So within one specific commodity, you can find specific components also of other commodities. So it's a very interesting sector, and I think it's important that you keep watching to this vlog because we're going to explain a lot about how to invest in it and how to benefit from it.
Yeah, but also the golden ring you were talking about, it's also based on the carat. So it's never only 24
No,
carats.
it compounds all different elements indeed. Yeah. So China, Casper.
China, what I said, Trump is interested in certain parts of the world where are a lot of commodities, like Greenland, like Canada, like Ukraine, the deal he wants to make. And as a result of the import tariffs that he is putting in place, China already bought a lot of commodity places in the world over the last decades, and they invested also through subsidies to get them out of the ground. But they said, as a reaction on the tariff war, we will increase the funds that we have in place, where we put even more money in to have more exposure on those commodities. And if you look at two important sectors nowadays, that are the semiconductors and the EV market, the electronic vehicle market. And if you look at what kind of commodities are, for example, in semiconductors, and then I have to look at my screen because I don't know out of my head. I can see it 5 times and I still don't remember. Antimony, gallium, germanium, and indium. And if you look at for example, gallium, 99% of that product is in the hands of China. And that is used for the semiconductors. So you see how important, also for the most important industries nowadays, how the commodities, how important they are. I was looking to the EV market, then the most important commodities are cobalt, natural graphite, lithium, magnesium, and nickel. And if you look at magnesium, for example, 95% is in the hands of the Chinese. And if you look at natural graphite, that it's almost 80%. Lithium they also have, but they are not. They have only like 20% of it. You see, so for those two industries how strong China is in the commodity market.
Absolutely. But being strong doesn't mean that they're also the most traded commodities. So germanium, for instance, it's not very often traded if you look at our clients. What is traded quite often is, for instance, crude oil. So the top 5 commodities that are traded in the world is crude oil, natural gas, gold, coal, and iron. And I think you all want to know now, where to put your money. So what is the outlook, Casper, on these commodities?
Yeah, if you split up the commodities, you can say, okay, agri commodities, energy commodities, but the outlook for 2025 is by far, you have to invest in precious metals. We will put it in the screen. And what are precious metals? You all know, you spoke about the ring, gold, silver, platinum, palladium, rhodium, but also ruthenium, iridium, and osmium. And I don't know, Martin, can you explain me what can you do with osmium?
I can only say one thing, that physics and that other, I left it when I was in high school because I find it really too complex.
Can you make a ring out of osmium?
You possibly can.
I also don't know. Yeah.
You can definitely make a ring out of gold, and if you have a golden ring which your partner bought for you 20 years ago, that ring has become worth a lot more because gold went up only last year with almost 24%. So gold had a really, really good year, and it still remains to be quite positive. But you might want to know who is buying that gold, what is pushing this price, and that are mainly central banks. And then you might think, oh, that's going to be the United States and that's going to be China. No, you're wrong. It was mainly Poland. Poland was the national central bank that bought by far the vast majority of gold, followed by Turkey and India. And China is only on the 5th place, funny country, Azerbaijan, buying a lot of gold. Why are those Polish people buying so much gold? What is the main driver?
No, yeah, of course, Poland is more closer to Russia and Ukraine, and so they are a little bit maybe aware of the the trade wars and the war itself. But their official statement is that they say, okay, we think this because of the trade wars in the world, there is more. It is more a volatile market on stock markets. What can you do? What can you hedge? Because you have to invest your money against a volatile stock market to go in another asset class that has no correlation with stocks. And that is, for example, gold.
Yeah.
And that's also something you can consider. If you also think for the next months or years, we will have a more volatile market, maybe I'm going to split my portfolio a little bit into asset classes with less correlation, and that can be gold or other precious metals or other commodities.
Absolutely. If you look at 2 big precious metals that a lot of people know about, silver also went up last year quite a lot. But on the contrary, palladium did not go up that much. And palladium, if you look at the last 10 years, went up almost 270%, but it had a little bit of downtrend, of actually quite a significant downtrend last year. And that might be because of the change to EVs, because palladium is mainly used for the catalysts within your engine, so to make the engine combustion cleaner when it comes out of your exhaust. Might be, but the correlation between palladium and gold has never been as big as at this moment.
Yeah, and all those commodities you can buy on the stock market, but at the end you don't buy them, you buy a future, and the future is a leveraged product with a lot of risk in it. So that also makes it difficult for private investors because they don't know how to invest in. So, of course, if you know and you understand futures, you can invest in it, but be careful, and there are other solutions. One of them is if you buy a basket, and if you want to buy a basket, why not buying a basket with the underlying precious metals, because they have the best outlook for 2025. And there is an ETF that is the WisdomTree Physical Precious Metals. Where do they exist of? 60%, a little bit more, is gold, then silver, 20-something percent, and then platinum and palladium. So it is also quite a logical, I think, weight in it. But by buying that ETF, you don't have to invest in futures that expire all the time, but you buy the ETF only focusing on precious metals with the biggest exposure in gold. Then you spread your risk really broad, no?
Really broadly, yeah. But you can do it even broader because, if you think, and what we do know, about, we were making a joke, it's raining a lot here now in the south of Spain, so the olives will be very juicy next year because they have a lot of water, but the commodities tend to be very cyclical. So as we know, for instance, cotton has had a really bad last 2 years. Why? Because the demand was going down, and also there was a lot of inventory. Looking also at, for instance, coffee price down 55%. So you can buy a Wisdom 3 broad commodities ETF that contains all different sorts of commodities. So for instance, the biggest position, again, gold, you can't go around it. But you also are buying, for instance, soybeans, you're buying corn for 4.8% of your portfolio, for your investment, aluminium, and for 31% all other types of commodities. So with this ETF, you're really having a really big diversification of investing in those commodities. Then I think, Casper, how you should allocate this in your portfolio, because okay, it's nice. Or do you have to put all your money in this portfolio of your portfolio in a commodity ETF or an individual ETF, or tell us something about it.
One step back, we got what you were saying. Commodities are cyclical, and the advantage of a commodity is that it doesn't go to zero. Gold always keeps a value. A gold mine or even the share of Apple can go to zero, but a commodity, okay, it goes up and goes down, and it can be a lot. But if you buy it in a broad basket, you spread your risk. But it's always nice to have something invested in that can't go to zero.
Absolutely.
And we say, okay, if you look at the ideal portfolio, your biggest positions should always be baskets, really broad baskets. Or for example, if you want to have an extra high exposure to stocks, you can go to a world ETF or S&P 500 ETF. And on top of that, we are looking always for sector ETFs. So again, you spread your risk, but you invest in certain different sectors. And on top of that, you can go to individual stocks or bonds. And if you go to the second layer again, so the sectors, if you look then at commodities, we say not every, but you should consider to have a position between 5 or 10% in commodities.
Definitely.
And we understand that we see on a daily basis that not a lot of people have it. So if you want to invest in it, reach out to us and we can help you. We do it on a daily basis.
Absolutely. Thank you for watching. Hope to see you next week. Don't forget to subscribe and thumbs up.